Hey everyone, welcome back to the channel. It's Saturday, April 18th, 2026. We just seen a meaningful update in our Elliott Wave work this week, and it's worth breaking down because it changes the near-term picture. Our latest count now treats the recent 9% correction as Wave 4 of a larger impulse. That puts us in the early stages of Wave 5, the final leg up in this sequence. The recalculated targets show the base equal leg level has already been reached or slightly exceeded in the 710 to 725 zone. The extended target sits higher at 730 to 760. What makes this interesting is the speed. Wave 5 has already covered a lot of ground in a relatively short period of time. That raises the possibility that this leg could be getting extended or even exhausted sooner than a typical Wave 5 would. Adding to that, April itself is a key time target on the upside. However, our time and timing system carries a built-in tolerance of plus or minus 1 to 2 months. That means the upside momentum we're seeing now could realistically stretch all the way into June before any major reversal sets in. So how are we handling this in the project? We are actively taking some profit on positions that are in the green during this bounce, spreading those profit-taking levels across the full target range from roughly 710 to 760. This range lines up nicely with targets that Tom, Lee, and other analysts have been discussing, around 7,300 to 7,600 on the S&P 500. At the same time, we're keeping the bulk of our long-term positions intact. The plan is straightforward. If Wave 5 keeps going and we push toward the upper end of the target zone, we lock in gains at strength. If the move stalls or reverses sooner than expected, we stay patient and look for clear system signals to add on weakness. This updated view fits into the larger 2026 framework we've been building. Q2 is still the highest caution zone, especially with inflation forecasts continuing to rise into Q4 and the new Fed chair transition still unresolved. Our timing system continues to highlight June through August as the highest probability window for the sharpest decline, and the fast move in Wave 5 only adds weight to the idea that any extension into June could be the final push before that window kicks in. The big picture remains balanced. We have near-term upside potential from the Wave 5 structure and April time target, but the longer-term caution from the June-August window and our base case 20% correction post-new Fed chair but pre-Q4 is still very much on the table. The project edge has always been having a plan ready for multiple outcomes. Whether this Wave 5 extends further or rolls over sooner, we stay diversified, hedge volatility when signals line up, and keep patience during these long grinds below all-time highs that make up the majority of market time. This kind of setup, where multiple systems are giving us both upside targets and longer-term caution, is exactly why we track them side by side. It keeps us from getting too excited on the way up or too fearful on the way down. What are your thoughts on this Wave 5 update? Do you see the fast move as a sign the rally still has room to run into June, or are you more focused on the potential decline window later this year? Drop your comments below. If this fresh look at the Elliott Wave shift and time targets helped your market exploration, hit like, subscribe, and turn on notifications so you don't miss the next one. Thanks for watching, stay patient, stay prepared, and I'll see you in the next video.